Hi, guys, welcome to Know Your Facts. And I'm Ali Nasser, your host. We have international economist Mr. Shan Said with us from Kuala Lumpur, Malaysia. And today we'll be talking about the possibility of Fed rate cuts and the implications on the global economy. So, Shan Said, I'll go directly to you. Please tell our viewers about the outcomes of an expected rate cut if it happens, and what would be the impact on the international economy?
Thank you, Ali Nasir. Thank you for having me in your show. Yes, today and tomorrow, Fed will be having the interest rate meeting. Uh, I expect and I foresee that Fed will cut interest rates by 25 basis point. So what happened this year? It has been a fabulous year for me and for our company, IQI, where I work. Uh, on 9th April, one of the very seasoned journalists in Malaysia, her name is Tanku Noor Shamsia. I know Tanku Noor Shamsia since 2014. She used to work for Banama and now she is working for TNS Media, one of the finest journalists I have come across in Malaysia. She took my interview on 9th April. She asked me what is the interest rate outlook for Fed, and at the same time she asked me what do you think where the Malaysian ringgit, the currency, will be trading this year. So I said for Malaysian ringgit it will be trading between 410 and 430, 30. Malaysian ringgit is now trading at 4.11 and 4.12 in the marketplace. So I have made the right call. Secondly, in the same interview, I shared with Anku Noor Shamsia that Fed will cut 2 to 3 times interest rate this year. Already Fed has cut interest rate twice, and this will be most likely the third interest rate cut that's going to happen. So what are the impact? What is the impact of this interest rate cut? This is giving us a forward guidance that moving forward in 2026, we will see lower interest rate regime. Right now, Fed is in a dovish mode, but ECB, the European Central Bank, is in a hawkish mode because they have maintained status quo in the last meeting. They have not decreased interest rate. So there's a great schism between Fed, ECB, and Bank of England. But I foresee, yes, they will cut interest rate. But if you see today's 10-year treasury yield in US, the yields are going up. What does it signify? It signifies that inflation is coming back into the market. And once inflation comes back, obviously Fed in a very tough situation. And I would like to quote a gentleman who has got heavy influence on my personality. And I know you are also impressed by him and you are, I would say, infatuated by him. Milton Friedman, one of the greatest Nobel laureates in modern economic history. He made the call, Ali, 31 years ago in this book, How Fed Will Cause Inflation, Chapter 8, page 189. And he was spot on. This is Chapter 8, page 189. If you can see how the cure and, the causes and cure of inflation. And Milton Friedman mentioned how Fed is going to create inflation. And Fed has been behind the curve. And I would totally agree with President Trump when he said at the start of the year that we don't need higher interest rate. We need lower interest rate. But Fed has been behind the curve in the last 17, 18 years that I have been following since 2007, 2006. Fed was again behind the curve. So instead of cutting rates in May, they started cutting rates in September onwards. So Fed has been behind the curve most of the time. So in 2026, we foresee that Fed will continue to cut rates. They will maintain a dovish stance, but there will be a point where inflation will start showing its head. It will become serious and it will become stubborn. So once inflation becomes stubborn, obviously you have to increase interest rate. So Fed is in a very catch 22 situation because once they're cutting rates, once you cut rates, US dollar is going to depreciate. Already US dollar has depreciated 9% YTD. At the start of the year, I said US dollar is going to depreciate by 10 to 15%. So I think I'm more or less on the right call when I say so. I foresee US dollar will continue to depreciate by 5 to 10% in 2026, and then Fed will be in a won't be in a position to lower rates because inflation will become serious. Once inflation becomes serious and it might go out of hand, then you have to start raising rates. So next year I see first 6 7 months Fed will continue to lower rates, and then Fed might give a pause. So I expect again in 2026 there will be 2 to 3 rate cuts happening in 2026.
Now, whether people agree with your stance or not, because many economists may like to argue with the latter part of your review. However, the important thing is what are going to be the outcomes on number one, the equity markets or the capital markets throughout the world, and number two, on commodity rates, particularly our favorite topic, gold.
Yes,
Yes.
I have been talking to many people. I think equity markets will go up. I am quite bullish on equity markets because once the Fed starts cutting rates, I think equity will get a big boost. I expect globally equities will go up easily by 10% in the first 6 months. H1, first from January to June, 10% very easily the equity markets will go up. When it comes to gold, I have already shared in Malaysian newspaper. I expect gold to be trading between 5,200 to $6,000 per ounce by year end. So I am still quite buoyant. I'm still quite bullish. I'm still quite optimistic about the outlook of gold, but I am also bullish on oil. You know, I'm a big fan of oil. Oil will come back. Yes, I have been off track when it comes to the oil market. At the start of the year, I said oil market will be trading between 77 and 83. Market is now trading at $63 per barrel. So I expect oil to be trading between 70 and $83 per barrel in 2026. So all the commodities, including gold and oil and silver as well. Silver, I'm expecting 75 to $125 per ounce. Silver is already trading at $58 per ounce. And this year, I said silver will be trading between 47 and 53. So it has already passed my forecast. So I foresee silver trading between 75 and $125 per ounce, gold 5,300 to $6,000 per ounce, oil I expect 70 to $83 per barrel.
But this is irrespective of whether the interest rates are cut or not, right?
No,
You are foreseeing the other economic factors as well. You are compounding all of those economic factors into the argument. Am I correct?
the premise is that US dollar will continue to depreciate. Fed will continue to cut interest rates. Advanced economies will stay weaker. So once advanced economy will stay weaker, normally those sophisticated and smart investors they take position in tangible assets. When I talk about tangible assets, real estate, gold, silver, agriculture, and luxury goods.
What are going to be the global impacts of this action if it does take place? And like you said, if the policy is continued to slash or cut the interest rates over a period of time, what would be the global impacts, and particularly on the economy of Malaysia?
In terms of, I already shared in Malaysian press, I expect Malaysian economy to be trading between 4.5 and 5.5. Ringgit to be trading between 3.90 and 4.25 against USD. So overall, ASEAN economies, I have come up with an acronym MITPV: Malaysia, Indonesia, Thailand, Philippines, and Vietnam. Vietnam is booming. Vietnam is, is on the upsurge. The trajectory is very strong. So these five economies, I have called them Fabulous Five. These Fabulous Five will drive the ASEAN growth story for the next 3 to 5 years very easily. In terms of US Fed slashing and cutting interest rates, equities will go up, real estate will go up, not only in US but other parts as well. Dubai real estate has become the new global currency. Dubai's market is booming, and I expect let's do a program next time on Dubai real estate, because Dubai real estate is now a very hot topic globally. Many investors from Europe, US, Pakistan, India, ASEAN region, everybody. And in Financial Times last week, they said most of the Chinese investors, they are taking position in Dubai real estate. So Dubai real estate has become the new global currency in terms of uh, gains, in terms of appreciation, in terms of safety. If you have invested 1 million dirham, Ali, in 2020 during COVID, 1 million dirham in Dubai real estate in 2020, by 2025 that property has become 2 million dirham. So almost 20% return per annum. I mean, where can you get this 20% return in real estate? So I think Dubai real estate, we will be doing this program next week. I think it's very important for viewers like Pakistani people who are looking at global scenario where they should be parking their funds. Dubai market is, where Pakistanis can easily fly in 2 hours time and they can take position. So I think next week, I think we should do a program on Dubai real estate market.
I'll have to do a tremendous amount of research for that. But I think that you are the right person to be asking those questions, answering those questions.
No problem.
I apologize. So you're going to be the person I'm going to ask all those questions, and I'm sure you're going to come up with the answers for it. And
Definitely.
of course, the Dubai real estate market is a completely different, unique market, and I'll like to talk about it as well. And I would like to talk about other Asian real estate markets as well, because
Certainly.
I'd be very interested in finding out what other countries are doing. I'm really grateful to you, Sean. We've we've made this pact that we are going to make this really short and sweet. So we
Yes.
come, we talk about certain subjects, and then when we are done, we say thanks. Thanks, Sean Said. Thank you to
Thank
the
you.
viewers. Thanks for watching, guys.
Thank you.